All right, y'all, back to work. Weekend is over. Hope you guys enjoyed the weekend. We have a big week ahead of us. We got some big news this week. We got Liberation Day on Wednesday. And boy, all the tariff talk right now has markets going up and back down. And, you know, when markets behave like this, these wild swings like this, it usually means there's a trading range somewhere on the higher time frame. And there's one just staring at us right now on the hourly. So range rotations, breakout pullbacks, fake out breakouts, range plays are probably where the money is made tomorrow. I want to cover my favorite range plays in tonight's video. I want to make sure you guys have a roadmap, a game plan to make some money tomorrow as well. So charts are ready. Enough of the intro. As always, thank you for joining me here tonight on the YouTube video. Let's get our hands dirty now and make some money on these charts tomorrow. S&P SPYs ready to go tonight. Nasdaq triple Qs are all ready. I have 5, I know that's a lot, 5 important clues on the charts right now that are telling us where I think the winning trades are waiting for tomorrow. 2 of those 5 clues are right here on the hourly chart. It's easy to see right now. We're very bearish here on the S&P SPY, bearish right now on the Nasdaq triple Qs. But, you know, 2 out of 5 important clues right now are on the 60-minute time frame right now. One big clue is the strength of that move down. Now remember, anytime we see a real strong move in one direction, all of that momentum tells us the sellers are going to try to retest that low before we see any meaningful movement going higher. So one big clue for tomorrow is expect sellers to be trying to take out that recent low from earlier on this morning. But what is arguably the more important clue, and I tipped this off, we mentioned this earlier in the intro, when markets make these big moves, it usually means the big range on the higher time frame. And there is that range right there. Market goes down, rotates up, rotates down. And in all reality, I know there's a lot going on right now with tariff talk right now, but in all reality, this market should now want to rotate back up to the other side of that trading range. That gives the buyers a lot of opportunity here now if they can time the entries properly. Because again, a lot of bears in the market right now. So 2 out of 5 clues are here on the hourly. Next clue is over on the calendar for tomorrow. We have some really big news tomorrow morning, specifically that ISM manufacturing index and that JOLTS report at 10 o'clock Eastern time. Remember, anytime we see big news at 10 o'clock Eastern time, and ISM is huge news tomorrow morning, we best be paying attention and ready for some volatility. That's 3 out of 5 clues. Be ready for volatility around 10 o'clock Eastern time. Now let's drill down to some faster time frames, some tick charts. We don't use time charts in our trade room. We always trade off tick charts because tick charts are based on volume and they make pattern recognition just a hell of a lot easier. And by the way, right now, if you're watching for the first time tonight, all the time frames you'll need are in the upper left-hand corner. That's a 7,000 tick chart. And that moving average right now is the only indicator I use to find winning trades. It is the 21 EMA. There are 2 more clues here, important clues on these tick charts. One important clue is this big move up into a trading range. Now, why is a big move into a range important? Well, because ranges, they love to rotate. They rotate using symmetry. We call them pendulum swings. The amount above, the amount below. We like to use things like expanding triangles or megaphones. So one really big clue right now is that new trading range is going to want to rotate back and forth using symmetry. One of my favorite clues though for tomorrow, and the final clue on our list for tomorrow's trading, are range breakouts. That recent range specifically right there, that recent range right there. Now, why is that a big clue? Because we know from experience that anytime we see a range breakout, we know that breakout pullbacks are one of the most consistent parts about trading and technical analysis. So knowing all of this, let's put a game plan together to make some money tomorrow. I love the idea of the breakout pullback zones off the 11 3/4, especially that 92 1/4 waiting below. What I'd love to do is run this price lower lower, wait for a pullback to that 21 EMA, let the sellers try twice on this. Remember, the 2-try rule is an easy way to trap in those sellers and use their stops to fuel that move. This bear trap entry will be a great way to time the entry off a breakout pullback. And then as we go higher, remember, where does the market want to go? It's going to want to rotate the amount below, the amount above. As it rotates now, think about adding to your winner. And one of my favorite ways to do this is this very simple add-on. As it starts to rotate off the low of that trading range, we can now look for some separation off the moving average. Think about times when pullbacks, right? They barely miss the moving average. That type of shallow pullback is great for adding to your winners during range rotation. Now, at this point, it's a bear trap, 2 tries into an add-on trade, and we're letting this sucker run using symmetry on the other side of that trading range. Now, heads up on this. We're still pretty bearish on the hourly chart. So as we go higher, I've got some setups I'm watching to sell it off the high, and I've got one really easy clue that will tell us when we can buy it if it starts breaking out, going higher. We'll talk about that part of the plan a bit later on the Nasdaq. But real quickly though here, what if we don't get that bear trap? Every once in a while, it'll run lower, and I could easily see this happening tomorrow because of all the volatility we're seeing right now around the tariff talk. We may not get the chance to trap those bears in once, twice, and squeeze those stops running higher here. Sometimes there's so many buyers down there that we simply kind of whoop off the low there and we V-bottom off that low. If this begins to V-bottom off the low, we still know what we want to have happen. We still want to have that rotation back up into that range again. We just have to make a small adjustment now for the entry. Watch closely. I'm going to draw a trend line off the highs. I'm going to bring that trend line down around that low to create a channel. Now, most important, look left, find some of these prior swing lows. Find one of those swing lows that lines up right around the low of that channel, and I always want to buy the first test of that channel. This could be a bear trap, like I'm showing you here. Oftentimes we'll get below the 21 EMA, get bears trying twice once again. We call this the 2-try rule in our trade room. Trap those bears in and squeeze those stops running higher. So again, if we don't get the bear trap on the deep pullback right now, the next best thing here will be that V bottom, that first test off that low. Look for ways to trap sellers below that 21 EMA, squeeze those stops, and trade that rotation going lower. And again, later on in this video, I want to talk about if we go higher here, how do we know when to sell it? And how do we know when to buy it? We're going to cover a really easy clue on that a bit later on the Nasdaq. One more variation though of this I want to cover is what I call a retest trade. We oftentimes will get a strong run down. We'll get the bears coming in and we'll trap those bears in for a nice easy winning trade. We'll get our 1-to-1 first target, get that stop up to point of entry, remove the risk. It's a profitable trade. But again, because we're so bearish on the hourly chart, we might see another leg running lower. Now that leg running lower is going to feel like a reversal. We call these retest trades, and some of our favorites we find in our trade room. Before I talk about retest trades though, let's slow down for a few seconds because I know that most folks watching right now, you know these patterns already. You're making money with traps and add-ons, but if you're watching for the first time right now, this might be a brand new strategy for you, a brand new language I'm speaking tonight. Don't you worry though, I teach this entire strategy in my free trading class. In fact, I have a ton of examples, bear traps, bull traps, add-on trades, V-bottom trades. Guys, I want to help you time better entries with these entry tactics. What I'll do is I'll put a link up topper for you, upper right-hand corner. Hit that link that popped up there. Take that free trading course because the strategy I teach in that short video course will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, bottom line, the markets are way too good right now not to be making consistent profits. So if you're still missing the best entries right now, if you've lost your confidence in your current trading strategy, again, hit that link that popped up there. Watch that free video course because everyone loves all the trade examples I include in that short video series. The best part is it is completely 100% free for you. And also too, guys, keep in mind too, I'm going to put all the important links you'll need to learn the strategy, join our trade room. Most folks start making money all on their own with that free video course. So I'll put that link for you in the description of the YouTube video. And don't forget, we trade together every morning, 8 o'clock Eastern time. I'll put that link for you down there. And if you're on Twitter, or X, as they call it these days. If you're on Twitter X, give me a follow. I post a ton of charts and videos during the day on the X platform. So again, all the links you'll need to learn the roadmap are linked up for the description of the YouTube video. So where did we leave off? Yes, retest trades. One of my favorites. I mentioned earlier that we oftentimes will get that run down. We'll oftentimes get that bear trap, pop it up, and then we'll get one more leg going lower. Some of my biggest winning trades in my trade room is what we call a retest trade. So we run lower, we trap the bears in, we get a winning trade out of it, but for whatever reason, that momentum's too much and it comes back and retests that low. Now, here's what's happening in these scenarios. Anyone who sells on that pullback right now, where's their target? Their target now is back down to retest that low. So sellers up here become buyers down here. Is this a good place to start selling? Of course not. In fact, it's the worst place you want to be selling, even if we are an overall bear market on the hourly time frame. These retest trades or double bottom retest in a bullish range environment like this, they're very simple. We don't try to pick a bottom on this. All I do is wait for that pullback to that 21 EMA, let those sellers try twice, then I know where their stops are. And again, I love to trap traders and run stops because stops, they fuel the move, in this case, going higher. If I can trap the bears in twice, when they get stopped out, the only way out of that short trade is to buy their way out. This is why these bear traps and running stops, using stops to fuel the moves, that's why these work so well in our trade room. And again, we know that range above us is going to want to rotate back higher, at least for now, until something changes tomorrow morning. And while that happens, we keep on trying to add to our winners. I want that higher high in price. I want that shallow pullback. And again, boy, I can't think of a better way to add to your winner than to use that simple chart pattern. So look for times when price pulls back and barely misses that moving average. Those will almost always be like over there, right? Barely misses, getting underneath that low. Again, it's that retest, bear trap, right into that add-on trade as we go back up into that range up overhead here. Now, what if we don't get that? What if we don't get that deep pullback right now? It looks like right now, the amount above, the amount below, it looks like buyers are trying to hold that pendulum swing and run this thing higher. Remember, this big range on the hourly chart right now, we can't forget about this. I know it's pretty bearish right now, but again, ranges, it's going to want to rotate back higher. Nobody should be surprised if by Liberation Day on Wednesday, we're all the way back to the high we left off the end of last week here. So how would I buy it as we're going higher? How would I buy this going higher right now? Well, what's the problem? The problem is you're buying relatively high. So as we come in now, I'm looking for what is basically a technical bear trap. It's bears trying once, it's bears trying twice, and what makes this a technical bear trap is the fact that we're now going to get down below that low. Whenever I'm worried about buying too high, especially in this situation with that strong move down on the hourly, I want to trap the bears in, but I don't want to buy as it's going higher. I want to buy underneath a prior swing. Compare that to if I run lower, I can trap those bears in once, twice, use their stops. See, in this situation, I can take a small amount of risk for a pretty decent amount of reward. That risk-reward ratio is beautiful. And because of that, I can use kind of a typical bear trap. But again, that's not the same situation now if all we do is try going higher. If this begins to rotate higher right now, right, what I always do on these is go half size, quarter size trade, higher high in price. Underneath that low, you want to buy as low as you possibly can. Again, I teach the entry tactics in that free video course, strong green candle, closing back above that moving average. Okay, so those are some bear traps to trade that breakout pullback zone I mentioned earlier, and some variations of this as well. Now, here's a really big question. How do I know as we go higher? How would I sell this back down again? And is there one thing that kind of tips me off that it might be a breakout and maybe I could buy up there? How do I know when to sell it and how do I buy it up there? That is a great question. Let's now cover that question, answer that question now over on the Nasdaq. Over on the Nasdaq, again, it's so important we remember here that whenever markets make these big moves, big move down, big move up, big move down, whenever markets make big moves back and forth like this, it usually means there's a range on here somewhere. And of course, we had that range earlier on in the month of March, and it makes sense, right? Look at the amount we rotate off the high back down to that low. That's not a coincidence, right? So now, again, we're very bearish right now, a lot of bear momentum, and I realize a lot of fear in the market right now because of Liberation Day, as Trump calls it, right? Coming on Wednesday when tariffs take effect here. But again, right, with this range like this, we should be looking for that rotation back up again, even though bears have control of the short-term trend. Now, I want to dive into the tick charts here and talk entries. But before we do that, though, if you're enjoying this video right now, please help me grow this channel by hitting that like button and make sure you subscribe to the channel tonight. I know we're all busy people these days. I appreciate you tuning in and watching my videos. So thank you so much for the likes, shares, all the subscribes, and all the ongoing support. Now, let's talk about Nasdaq here on the tick charts here. Drilling down on the tick charts right now. And again, this is a 4,000 tick chart. The Nasdaq is a bit less volume, right, than the S&P. So a slightly lower tick chart value there, and the same 21 EMA. You can see right away that big move up into that trading range. Ranges, they love to rotate back and forth, again, using things like triangles, and my favorite are always the pendulum swings. And of course, one of my favorite all-time trades in our trade room is anytime we see a range breakout, and there are two of them here right now on this Nasdaq. Anytime I see a range breakout, I look for, there's a range right there for a breakout pullback there. There's a beautiful range right there for a breakout pullback right there. So really any of these areas are just begging right now for a bear trap, like I mentioned earlier on the S&P. So the bear traps, the add-ons, the rotation plays I mentioned earlier can all pretty much be used here pretty much the exact same way here on the Nasdaq. Now, the big question right now, though, is that if we rotate going higher, what can I do with this overhead? Now, this is something we talk about a lot in our trade room. Range rotation. Range rotation can be very, very strong. Look at that range rotation here. We had a very strong run to begin the week next week, but look at the range rotation. Range rotation can be very, very aggressive, right? It can be very aggressive back and forth, right? Again, I don't think anybody will be totally shocked if we rotate all the way back to the other side of this range by the time we're done this week. So one thing about range rotation, it can be very, very strong and very difficult to to reverse. For example, if I go higher here right now, again, we know we're very bearish on the hourly. So I would like to try to sell this thing back down again. But again, rotation is very, very aggressive. So when it rotates off this high right now, this is going to be a little more difficult of a top to pick than I would like it to be, because we know we have that big range overall on the hourly. So I don't do this very often. I would usually say go up, trap the buyers in once and twice, and of course use a bull trap up there. That would be your typical way to sell a rotation going back down again. Use a bull trap up there. But again, with the big range on the hourly, with all of this rotation momentum coming off that low, my goal tomorrow will be a little bit more cautious. And to do this, I'm looking for a V-top. I'm going to wait for price to run up, begin to run back down again. I'm going to wait for that momentum to shift. Again, I'm not going to try to pick a top on this. In certain situations, tops and bottoms are just very difficult to justify trying to pick. In my opinion right now, with that big range on the hourly, this is not a fight I'm willing to fight up around that high. Now, there's one clue though up here that will tell me when to focus on the buy side. We'll talk about that in a moment. However though, if I can get that V-top and begin to get momentum now rotating, now remind me again, rotation off the high, rotation off the low. I now know where this market wants to go. Again, I would love to pick a top on this, but in this situation, very difficult for a consistent and reliable way to do that. I'm going to wait for a V-top, or I'm going to wait for some turn momentum, find that trend line off the low, bring that trend line up around the high, find that channel, and again, I want to find those prior swings, and I want that first test is the best test off the top of that channel. That is a trade I can get down with, because now we're not trying to pick a top on this. We're waiting for that momentum to roll over, and now we know that range rotation. Now we know where it's headed. My job now is to make sure I apply a bull trap, a buyer failure, a pullback combo, any of the entry patterns I teach in our free trading classes. I can apply them now off the top of that new channel, right? Makes sense? Okay. Now, there's one very important clue though that would tell us if we go higher. How would I know? How would I know as we go higher here? How would I know when I can look for the long side? Well, it's always going to be with the moving average. It's going to be separation. If I see this now begin, first of all, I can measure the amount below that trading range, bring it up now above that trading range. If I start seeing this price rotate off that low, and we start seeing separation off that 21 EMA. Again, think about the moving average, right? Think about the pullbacks will barely miss the moving average. If I start seeing now this thing grinding and separating away from that moving average, okay, now I know we have a range breakout, and more importantly, now we know we're probably now can complete that rotation back up again. So again, as we rotate higher here, I'm looking for now that pop up, that rotation higher. I want to see signs or evidence of separation off that moving average. Now, once I get that separation off the moving average, that now is the clue that this trading range can now be used for a breakout pullback. And one of my favorite ways to do this is to find a channel, draw a trend line off these highs, bring that trend line down around those lows, right? See now look left, find some prior swings. And again, I want to get down around the low of that channel. Ideally, if we're lucky, we'll combine the top of that range right now. That will become a key area of support for us, basically flipping resistance into support now. And now as we pull back, I get below a prior swing. That's usually where the money is made in these types of situations. I get below that 21 EMA. The bears come in. They're trying to fight in this thing going short here, and they can use their stops to fuel that move running higher. Now, one cool thing about these types of moves is that the breakout leg, that pop leg, can be used as a measuring leg. Once I know how deep that pullback is, then I can take that first leg as a measuring leg, pin it around that low, and that will now give me that final target. As always, if you want to make more money, don't trade more often. Add to your winning trades and leave a runner. And one easy way to do that in a range breakout like this is to measure the size of the breakout leg. Now, if you want to get a little more aggressive on this, if things start to really punch and go higher, if you want to be a little more aggressive on this, you can look for, once we see evidence of a breakout through that pendulum swing, if we're seeing some shallow pullbacks, if we're getting that separation off the moving average, I can now look for, and I always go half size, quarter size on these because it's pretty early in the breakout process. But remember, anytime we see that higher high in price, that shallow pullback, there are usually buyers looking to buy right below that low. So the most aggressive buyers, if they start seeing that separation off the moving average, higher high in price, easy spot there, take a small nibble on the way higher. And again, don't forget, don't chase after it up here. Think about that breakout pullback, get that pullback, trap those bears in, and squeeze those stops running higher. All right, guys, that's the game plan for tomorrow. Now, speaking of tomorrow, the place to be is in our trade room, 8 o'clock Eastern time. Guys, the easiest way, start making money in these markets, come out and do it with me, trade along with us every morning at the opening bell. As always, I'm going to put all the important links you'll need to learn the entire strategy. I'll put those in the description of the YouTube video. Start first with that free trading course. Enjoy all the trade examples I include in that short video series. Then come join us in the morning trade room and we'll do it together. In the meantime, guys, be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.